Hi, I'm Rich Causon of Causon Business Finance and welcome back to the Shed of Shillings. Today I'm going to be talking about what is asset finance. Asset finance is simply a way of explaining that you're paying for something over a period of time, like a car, plant or machinery. There's two types of asset finance. One is hard assets for things like plant, machinery, cars, vans. The other one is soft assets for things like photocopiers, CCTV or computers. Used assets can be financed as easily as new ones, and there's all sorts of different types of asset finance out there. Broadly speaking, two camps. One is ownership, the other one's not ownership. So ownership is hire purchase or lease purchase. That's where you pay an X number of payments over a period of 3-4 years, can have a balloon payment at the back of it, and the kit is going to be yours at the end of the contract. Typically, you're going to have to pay the VAT up front, but it's a lot of vehicles are financed this way in the UK. Second up, first of the not ownership facilities is finance lease. That's where you're renting the equipment over a period of 3-4 years. You haven't got the right to sell the goods at the end of the contract, but you will receive a lion's share of the proceeds of what you sell it for. VAT is added to the rentals, and it's worth talking to your accountants because there's probably VAT, tax benefits for using that. Equipment leasing is a way of describing fixed period lease rental, fixed term agreements for small items like photocopiers, CCTV equipment. Check those agreements really carefully. They can have termination clauses where you've got a right to the leasing company to cancel the agreement, otherwise you'll be stuck in them forever and a day. There's another type of leasing called operating leasing. Brilliant type of lease which funds something over the period that you need it for. So if you had a contract to make pies for the next 4 years for a supermarket, you could literally just rent it for 4 years, hand the goods back physically to the lease company and they'll take it back, so you're only paying for the depreciation. Contract hire is an operating lease for cars and commercial vehicles. So you are using it for X number of miles per annum and handing it back within that period that you're borrowing it for with a certain amount of fair wear and tear on it. Meanwhile, the leasing company will maintain the vehicle, service it for you. It's great for fleet buyers, takes all the hassle out of it, but then you do need to be aware it can be a little bit restrictive if you want to come out of these agreements early. So make sure that you are happy to be tied in for the period. You can also do something called refinance with your assets. So you can either use a refinance to raise cash within your business, give you a lump sum loan, or you can use it to spread out existing finance agreements that you've got, making the monthly payments lower. So that can be quite helpful. It's suitable for lots of different types of businesses, right the way through from the sole trader in a corner shop all the way through to a PLC or corporation. The only thing to consider is, can you afford your loan? So you can borrow anything from £1,000 up to multi-millions of pounds over as little as 12 months and as much as 10 years, somewhere in between 5 years being the kind of average. Lots of different types of facilities out there. Go and speak to a broker, get some advice on what to do. You can talk to me or email me on the telephone number or the email address at the end of this video if you want to. I've been Richard Causon of Causon Business Finance at the Shed of Shillings. Thank you for listening.